Hey, everybody. I hope everybody had a good Thanksgiving. Let's give a few more minutes, see who joins us tonight before we start looking at these charts. Now, I hope you guys have been taking advantage of this Black Friday sale. We don't know if it's going to continue going down, but definitely a Black Friday sale. So I'm hoping you guys are taking advantage of it. Right. I know I know I am looking forward to see how low we can go. I don't know if you guys are excited too. This is we're going into the end of the year. Hopefully you guys are continuing to stay green or at least a little bit safe. Definitely a lot of volatility. So it's great for swing trade not swing traders, not so much swing traders, but it's definitely good for scalpers. You can definitely really make use of the ups and downs throughout the day. I I hope you guys are staying safe. I'm trying to stay safe. I'm trying to stay afloat. I'm still up on the year, but sometimes it is difficult. Definitely a lot of hard hitting things. I definitely see this heat map of today. The only thing that was really green was Tesla, barely green. Apple, Apple still hanging in there, but Apple's been sideways for a while. So to see it green is a good thing. And then PFE, Pfizer. Everything else is pretty much red. So what this means for you guys is it's a Black Friday sale. Hope you guys are taking advantage of that. Payment processors are still getting hit. This is times like this is where profit is made. Right? We start planning for the future of things. Tech here. Now we had some news today that did help with this dip. Powell was talking. So if you guys wasn't aware, all right, I'm gonna start, but feel free to leave any questions. If you guys have anything, or if you have anything that you want me to take a look at, feel free to leave that in the comments. And if I see it, I can take a look at it. Otherwise, I'm just gonna look at SPY and other stocks that I've been tracking. So with SPY, you see we got rejected. This was Friday of last week. This candle right here, and like I mentioned last Tuesday, beware of short weeks like that. We don't know what's going to happen. So this was Tuesday. All right. So the 24th, last, actually last Wednesday, right? So last Wednesday, and then last Wednesday here, and then Friday was here, the 26th, right? And on Wednesday, Friday was a short day, but it definitely did dip hard. So would have taken you by surprise if you went away for Thanksgiving and then you just look back at it, right? So Monday we open up. We were a little bit choppy too on Monday, and then today we continued downward trend. So one thing to be concerned about is we're approaching that 50 day average. And usually, if you look at that, it's neither going to be a bounce or it's going to fall through. And the last time it tested the 50 here, it fell through and then did a continuation. So here, while we're approaching the 50 here, I will warn everybody to be careful. Now, don't if you do expect a bounce, wait a few candles to see if it's gonna bounce for sure. Yeah. So if you think you're gonna get in, maybe wait to see if tomorrow is gonna end green for you. So what you could do is similar to here, trade here, especially if you're swing trading, right? You wait for the bounce and then you get in, set a stop down here below this price, and you get this part of it. Okay. So that's what you could do. So wait for this. If you try to be predictive in your movement and try and play this bounce before waiting for confirmation, you might take a hit because if it does reach down a little lower. But that's why you set a stop somewhere down here, right? Maybe uh at 450, and you catch that right up. So just zoom into the hourly just to look how ugly this has been, right? So definitely, this is what I mean when I think I see a trend change. We definitely see this move right here, right? So this is corresponding to the daily right here. This move where it's sideways at the top and then it falls. So complete trend change. We go back 90 days, right? The trend, this was the trend, right? This move was the trend. This broke the trend, right? This consolidation period. We were expecting maybe a pull, not a pullback, but a continuation. But the continuation pattern did not occur. And what we did see was a break here. So as we're coming here to this 455 level, maybe see if there is some support at 455. There's no support 455. I think we're going to break through and continue down we go. Um, I am a little bit concerned, especially when I look at the weekly, because we haven't had a retracement back to this 50. The weekly 50 is usually a retracement area. You can see, we go back a number of years. We can see that every time it extends far above this 50, right, for a standard amount of time, it always retraces back to it. Right. So we've gone a significant amount of time without a retracement. That's what I'm observing. So I think we are due for a pullback to this 50. Now, will it linger on in this area and then, the 50 will continue to go up a little bit higher, right? It could. It very well could. So we could probably catch it maybe at 430, maybe at 420. Just know that we are really overextended. I do think that we're going to retrace to the 50. Now, I can also be wrong. I don't know. Nothing I say is for sure. It's just what I see, what I think could happen. So definitely do your research also. Don't just take my word for facts because even I am still guessing at this moment. Nobody knows for sure what's going to happen. All we can see is throughout the day what has happened throughout the weeks and months and compared to past data and what is likely to happen. So if that's the case, when I'm looking at the monthly, I get even more concerned. Look at this overextension here in comparison to here and here. Right? This is a crash in '09, so this is a separate thing. I don't think we're building up to a crash like this, but we are due for some pullback. And this pullback isn't a bad thing. It could be a good thing. because it allows more investors to get in, allows it for a quicker climb up again. So we do need, we can't just go up forever. We need to come back and before we can make another run, another stronger run. Think of it as you're sprinting, right? You're running a race. You can't just run that race forever, right? You're gonna have to stop before the next event can go on. Right? The event will end. You take a breather, and then you continue. So that's what I'm seeing at SPY. The daily is at some support level. There was support here from before. See, this was over resistance. It broke through here, and now we're using it as a support. So right now we haven't confirmed yet if this support will hold. Definitely be careful, SPY, especially we're going into the end of the year. I know this time of year, um, we usually don't have too much to worry about, but also do be careful because anything could still happen. Just because it wasn't a time to be concerned about last year or the year before doesn't mean that this year will be the same. It could be different. All right, so that's SPY. Now, let's take a look at Apple. Definitely, Apple was green today, right? And so we might even say, why is Apple green and uh, all other stocks were red today? Well, there's a lot of things that Apple has going for it. One, it was one of the techs that didn't have a huge run um yet, right? If we look at it in comparison to Nvidia, right? Nvidia had a huge run. Apple was sort of a lagger. Sort of just hung in there. It just went sideways for a while. So if people are thinking of, especially traders or investors, they're thinking, where can I put my money? They're probably going to put it in Apple or something similar, right? So see this movement here and this breakout. So this right here, I might even consider this as, I talked about it last week, the week before that. I wanted this to be a breakup and then show some support. So today it was a continuation. So there was some support at this level, right? This was old resistance here. New support looks like, and maybe a continuation, or maybe a come back and test the support again. The more times the support is tested and holds, the better that support becomes. Use this as an example here. You can see break from support here. Price holds above it, comes back, tests it, goes back up, tests it again here, and then continuation up, right? If we go back 2 years, we look at this range here. The more time this support was tested, every time it was climbing higher. So when we look at a support, the more time a support is tested, the better. Now the opposite is also true. The more time a resistance is tested, the scarier it gets. It means that the next time it approaches there, maybe it will get sold off again. But you can see equal amount of support and resistance here, but we see more support. So here, since everything in the market is going red, we'll continue to see, because we don't want to get faked out. If you think that this could take off, it, everything in the market is red at the moment. The only one that is green, well, the only few ones that are green is Apple. It's one thing to be concerned about, and so don't just get in it because you see it being a green day. It could be a lagger, meaning whatever happens in the market, it doesn't follow right away, but eventually it does, right? And Apple is pretty extended. We look at on the weekly, right? Pretty extended already. Apple is a stock that really likes to hug this 50. right? This 50 weekly. We're going back. Very few times we break below. So that's one pattern that you have to pay attention to, especially since we're at these all-time highs. Maybe we hug it even more. On the monthly, it becomes even more true. You can see like clockwork here. This right here is way extended. Every time we've seen something of that magnitude, it usually reverts back. Right? We have a few months where the stock just falls. So keep that in mind. So that's Apple. It's doing good today, but let's see where tomorrow goes. Oh, look at Amazon too. And Amazon's at an interesting spot. And I say interesting because it was range bound for about a year and a half, right? Price was range bound for a year and a half. It's showing some sign of movement upwards, but it's also seeing selling pressure up here. The good thing is the old resistance here is showing to be some support right now. See today, no matter how much the sell off was, it still kept above this 3,500 level. That's a good sign for me. That's a very good sign. But I do want to see if it can continue to stay above. Maybe this could be a entry for some people, right? If you're thinking about getting a position in Amazon, I know Amazon is pretty expensive. So if you do it, we're probably going to be playing some spreads, some call spreads, put spreads, whatever spreads, just to help you lower the cost of it and play with it. But I definitely think that it is due for a pop, right? On the weekly. The reason I say that is on the weekly, it's not as scary as the other ones. It's hugging the 50, right? So if it keeps with what we've seen in the past, right here, we definitely could break a little bit below here, but I think we could break up, right? Show some strength and continue breaking up higher. Your teacher, we're just blind people leading blind people. But yeah, looking at the history of Amazon, that's what I see. I think a breakout is coming. Um, so the monthly, not too scary yet. Not something on the caliber of what we've seen with Tesla and Apple so far. So it's sitting in this area. I want to see what it does. It's been building pressure to the upside, but it also hasn't been breaking it significantly. So we'll continue to watch it. I definitely think it could break out, but if it can't, we could probably come back down. And down here will be a great pickup. Now, just looking at what Amazon has done in the past, right? Just price action in the past, it hasn't been known to have huge falls, right? It does get close to its 50, but gets close to its 50 by consolidating, right? So the longer it consolidates in this range, the 50 will climb up to meet it. And when it does, it takes off. So we see here, right? We see here a little bit fall and then consolidates. So not anything too big, too significant. Right. So that's Amazon. Now for this was hot play from a few days ago. Facebook, the metaverse, meta plays. We have things like Roblox, everything like that. The move to VR, that hype. I don't think that hype is down or done yet. I think it's just delayed, right? So we did see a pop, and so we see. If I change my drawing set, let me make a new one. set here. Show you guys. Trying to clear it. All right. So one thing that I see that we need to be careful of when we see Facebook is this right here. Now, I don't know for sure which one it's going to be, but at the moment, it's forming this pattern. Right. So this pattern, this kind of pattern, when we see it, it could break either to the upside or to the downside. There is no set, there's no set rules that says, hey, this is gonna go up and go up only. All the patterns that you see, they're just the likelihood of it going up, going to the upside. So this kind of pattern is a neutral pattern. We're seeing it make lower highs and higher lows, right? Especially today. See if tomorrow we break down below here, or if we can bounce from here and go through here. But we probably have another few days. So if this pattern continues without a breakout for us, we're probably gonna see we're probably not gonna see any new highs in Facebook until the new year. Well, at this moment, we're probably not gonna see any new highs in Facebook until the new year. All-time high was sitting at 384, 84.33. And we only have this much left in 2021. So we're probably not going to see a new high, but that doesn't mean that we're not going to see a new high next year. Definitely, Facebook has been one of the underachieving stocks of the year for the mega techs. When everything ran, it actually did drop, but this is a good thing. People could see this as an opportunity to get in. So if we do continue down lower, one point that we need to look at is this level at the 300. This point at the 300. These lines don't look good. They're all cricket on the higher time frames. But this point at the 300 is what we're looking at, this range. So it did sit there before the breakout, before this breakout here that happened over the course of 2021. And so we could come back and use this as a support. So 300 level. So if we do break from wherever we are now, which is, we're pretty close. We're only like $20 away. Do break from there. We want to see that there is some support at the 300 level. Right. So on the daily, we can barely. On the daily, this 300 level is sitting right here. Right. This 300 level sitting right here. So it may come down here. If this pattern breaks out, if it breaks to the downside. On the weekly, we see it even more right here. Right, this range is what we're looking at if this pattern breaks out. You could just poke down here. Now, Facebook has been a stock that has been following its 50 pretty well throughout the past. There's been a few times that it did break below. So this was COVID. This right here was 2019. 2019 had a little correction for it. But other than that, it's been hugging this 50. So if this continue to respect this 50, this could be a good time to get in. But we want to see. We want to wait for confirmation. If you wait for confirmation, you always be a little bit late getting in, but you have more accuracy. But if you're you're predictive in your approach, what you will have is you'll get in closer to the bottom, but then you also take more losses, especially if it goes against you. So always have your stop in place, no matter what you do, predictive or reactive. Just have a stop in place, so that you know how much you are gonna be losing, just in case it reverses on you. And where you want to set your stop is always where the structure of the market of that stock breaks down. So with if you're predictive with Facebook, that's somewhere down here, right? So down here, the 307 level. If you're going off the weekly, if you're going off of the daily, right? The structure of the daily, the structure of the daily, right? 200 here, so be the same, 307 here, because it has reached this point before. Or if you want to have it closer, be like right here, right? You can set something at 315. So know how much you can afford to lose and only set to lose that amount. Not saying that you have to lose it. You have to know if that trader goes against you, how much you're willing to put at place. Because it's called trading for a reason. Not called just blindly getting in. So this Facebook. So let's take a look at SoFi. SoFi did break. Come on. Thinkorswim is going pretty crazy on me. Okay, so this is SoFi. So SoFi, I was hoping that this would be a breakout, but it didn't happen. It actually became a triple top, right? So it's just triple top range. This line right here is no longer valid because the structure broke. Right here, we're thinking that it's going to break out here. Did not hold. So then it became triple top here. So we could probably delete this line. No longer a valid pattern. So we just see it in this range. So if you're thinking that SoFi is something that you want to take a risk at, it could be a good chance for you, especially since it's approaching its support that's been there for a while. There's been times that it did violate the support by a little bit. So basically, you should look at the support as your where you're going to be adding in, or below here, right? Below here was you're starting to average at the support, and then down here will be where you're adding in. That's SoFi. Now SoFi is a brand. I would even say it's a brand new stock because it just came out. It literally just came out in 2020, 2021 was its first year. So stocks like this, it's gonna take time. A stock doesn't just come out and then all of a sudden go to 100. It takes time for it to build up its investor base, trader base. So people know its pattern, people know its formation. It has some record of it keeping some form of price action. Um, and then once it does that, but the first few years is going to be pretty rocky. We look at any stock, when it first began, it is going to be like that. At the very beginning, all stocks are the same. They all have the same amount of risk, and nobody knows if they're going to truly make it. It's only after a few years of them doing really well that people catch on. Also, 5 years to the moon. I'm hoping it does. We don't know for sure if that's gonna be the case, but I do hope that it does. I do have a small position. Well, not really small, but I have a decent sized position that I do want to hold and see where it goes. Um, so at the moment, it's approaching. area where if you are looking to add good risk to reward, any lower is probably even better. The lower it goes below this point right here, which is at 16, it's even better for you. All right. Especially if you believe in social financial stuff, right? Social lending, and you think that that has a place in the future, definitely something for you, right? So it is never a session if we don't look at Tesla. Now Tesla is forming something that I want everybody to be aware of. And this is, I drew this out the last time. Um, Now it's not, it's only on the daily. So the monthly and the weekly, we don't really see it too much. But on the daily, because this is a smaller time frame that we're looking at, this is a price action that I'm seeing, and it's been keeping true to it, right? So it's forming these uh, lower highs on the daily, and it's also forming these lower, higher lows here, and it's getting pretty close. So the end of the year is here. So if we do have another pop up, we want to see it break above this 1165 and stay above. Maybe it has the opportunity to create a new high, maybe 1300. But if not, I think we may fall, test this 50 moving average again um, at 985. Maybe we can even go down to 200. And the 200 will be a blessing. That will be Black Friday, Christmas, New Year's, all wrapped around. But just looking at the charts, the weekly and everything, I do think that we will be in for a deeper drop than just, well, we probably could reach to 200. Just looking at the weekly, right? This is an overextension move. We haven't had a trace back yet this year. Right? So we started here, we came here, right? And we moved up. So we hadn't had a trace back. So we do think that this similar dip will happen at the beginning of next year. If I think that that could happen, that could put us right here, right around 900 or 850, right around in this range, right? Which lines up with this where it broke out from, right? Where it broke out from was this 900 level, right? So as we're extending this out into the future, usually when it breaks out from a resistance like this, it'll come back and test it. So that's my thinking for Tesla for next year. Something I plan that I'm going to continue to just watch. Because I think it could come back to this 900 level, which is, will be a great time to add. But when it does come there, we want to look to see what the pattern of the market is. Because as you can see, it's been a crazy 2 years for Tesla. But with Tesla in the past, we can even zoom in that low because this price action has just been so crazy, right? Tesla in the past, whenever it has a crazy run like that, right? So this was back in 2013, so 2013, 14, 15 here. That was about a 2 year run too, right? 2 year run here. And then the next few years after that was stagnant, meaning it was just consolidating. We didn't make any new highs until 2017. So the cycle of, and this is the boom and the boom cycle, right? So basically, you have your boom, you have your run, and then you have your consolidation period, which would typically be equal to how much time you ran up, right? So 2 years, spent about 2 years in this consolidation period before it had another little pop, made a new high here, right? New high here, but wasn't enough strength, so it consolidated again, and then it kept going. So as it becomes a more established stock, a more established stock, maybe it lowers that time. The consolidation period becomes a little bit shorter. Maybe it's not an equal amount anymore. If it spends 2 years running, maybe it spends 1 year just consolidating, or a year and a half consolidating. Now that's just one of my theories, but I think it does hold some weight. Definitely one thing that I will be looking for. And if we do notice any consolidation like this, keep an eye for the supports, right? When that first level comes in, right? When that first support comes in, you're not gonna know it. You're probably everybody's gonna be in a panic, and then people get in, they catch that next wave, and it reaches the same point and gets rejected, right? And then it goes back to the support. Maybe it goes a little bit lower here, right? Like here, but just keep an eye out for the support level, because that could be where you're at again, especially if you are long term in Tesla. You should be keeping an eye out for these support levels to where you're adding in to your position. So that's where I think it's going for Tesla. And I see the struggle beginning on the daily here, right? So this is one of my drawings, this pattern right here. Going back to my other drawing, right? So definitely in this range, it's still staying. It went a little bit above 1100, but 1100 isn't holding too much, so I think it could come back down to into the 1100 1000 range. This line right here is where I think it could fall to. So that's Tesla. So let's also look at NIO. NIO, if for any one of you guys who are playing EV, it's been a hot stock the last year. We saw it consolidating this year. This is what consolidation looks like. And it's getting really close to the end, right? This to the end of this pattern. This is on the daily chart, and it's showing, and it shows it on the weekly, right? Shows it on the weekly. Definitely shows it on the monthly. You can see it here. And now the question is, will it break out or will it die? Right. So I'm not certain one way or the other yet, because there is some concern to me, especially involving the China market. They seem to be having a lot of issues this year. It's not just NIO, it's a lot of Chinese stocks are having issues right now. So one thing that is a concern to me, what will kill it, but let's see what the investors think. Investors and traders think, because if they think that it's worth it and they get in, ultimately they are the ones, investors, traders, they are the ones that would drive the market going higher. So small caps, it's hanging in there. It's hanging in there. We're getting close to it. Maybe we see an end of the year rally, right? And to next year, we break that all-time high again at 66. But if you notice this pattern and you're thinking to yourself, maybe I should be adding, so this could be a good level. But just know, just set a stop somewhere down here. Somewhere down here, some of the 31, 30, 31 or 30. Right? That's enough. And I showed you guys how I usually do my risk analysis on it. Well, I calculate my risk on this position, but I can show you guys again, right? So imagine if we got, so let's say you have $10,000 to your account, right? I would recommend just risking no more than 2% of your account, so $200. Not saying that you only have to have a position that's worth $200, but you have a position that will only be risking $200, right? So $200 from where you enter the market. So if you choose to enter the market right now at $39 and you're setting a stop down at, where market breaks down here at 30. So that's a $9 risk, right? So a $9 risk, you're dividing 200, which is 2% of your account by 900. So you can only own 222 shares. Okay? 22 shares if you get stopped out. Or if you do decide to go the option route, right? You take a look at the option contracts and you go, maybe you get like a month out or something, right? $200. So you can at most buy this 42 strike for, right? And, so if you completely lose that $200, no biggie. It's 2% of your account. You can make that back and maybe a trade or two. But, um, that keeps you safe. So that's usually how I would do my risk analysis and risk management for my position. So hopefully that helps you guys out too. So this NIO is getting to the end of it, close to the end of this pattern. I think it could break out. So we'll keep a closer eye to it, especially since it's pretty long drawn out and we only have a little bit of room left. So 22. Now this used to be a fan favorite, but has definitely been going down. And the recent news hasn't really helped it too. But we've seen it in these parts, these price levels before. So I don't think that it's anything to be concerning, especially if you think that this is something that you are interested in long term. These levels are definitely good support levels, right? It's been holding here for a few days, right? So we can even draw another line here, right? Because we've seen it violate here and it's holding here, right? So if we think that it could bounce in between these levels, right? High of 28, low of 20. This could be good time to add in. And maybe you use this as your reference to get out, right? Where you're setting your stop at 16, $4 risk shares, right? So you could get that. It's a new stock too. Very new stock. It just came out in the beginning of 2021. So it's probably just like SoFi. It's gonna be rocky the first few years. We're probably gonna just see it, try to make a new high and then back down. But what I am paying attention to is every time it dies down, how low it goes. Because we see it keep making new lows, that means there is real no real support there. No real investor that is interested in staying with the stock long term. So when you see something like that, it's something you should be concerned about because it means next time it might not reach as high, right? Next time it might not even go to 45 here. But what we're seeing here is there is some support here, so it's not completely being sold out. Every time it makes a new high, it comes back down, but it's staying at this level. So I hope this continues to be the case and it stays here. So we could see a move to the upside. Um, and I mean, it is a smaller cap, but it is also sort of has that growth aspect of it. And let's just continue to monitor it. It could be a few years, this time next year, I won't be surprised that it's still in the 20, $30 level. It could take very well the next 3, 4 years before it establishes itself as a very good stock that people are very interested in and people want to trade, people want to hold. in their portfolio before it really takes off. New stocks don't really get that attention from funds and from investors that really hold and make it so that it keeps its value. Another lower cost EV stock that has been decent. Um, this is a US based EV2 is Fisher. Now the daily chart looks scary because it's just going all over the place. But if we pay attention to the weekly, right? We draw on the weekly, we should see on the daily. Right? So we see do support here. And why I'm doing support here as opposed to down here is you see more points of contact on this line. Points of contact here, here too, more points of contact. Right? So this is the range to pay attention to, right? And if we are paying attention to this range right here, right, on the daily, we see it here. This could be the start of a new breakout. Right? So when you're playing a breakout, you see it come up here and you see it forming some support. You want to set a stop somewhere down here because this breaks the formation of this breakout, right? This breaks the structure of this breakout. Somewhere down at the 18 or 19 level, right? The deeper you are, you give it more room to breathe. There is no hard line where price could be. There's some slipperage here and there. So if you're thinking that this is a breakout that you could play of this stock, you could set a stop down here and catch it on the upside. Right? Maybe it goes back and tests all-time highs, break all-time highs, and maybe it continues. Right? If you're long-term, watch it to see where it goes. Not saying that this isn't bad area to add into long-term. Still pretty good. In the grand scheme of things, it's pretty good. But it would have been better down here. And if you missed this already, so we want to see if this is becoming the new support. But for now, I think this is a breakout play. It could be a very good breakout to play. Right. So as a trader, we have to sometimes take a risk because we don't know how this is going to play out. Right. So that's why we set our stop here. Set a stop down here at 18. So if it does fail this breakout here, it comes back to 18, we're out of that position, we take a small loss. But if it continues, right? So we're jumping in at 2150, we're out at 18. So do the math on that. 15 minutes, 18, right? So $3.50 risk. But if it goes from there to $30, you've made more than your risk back. And if it goes and approach these all-time highs and it breaks it, you're on your way to having sometime upwards to 3 times your risk back. So good risk to reward. All right, let's see. Now, when we're talking about EVs, we also want to look at stuff like plug because they go hand in hand with EV. It will load. So things like plug. Now, why is plug essential? Because if EVs are going, things like plug will go because plug is the charging, right? Charging stations, right? Things that EV vehicles will need. So we're seeing it form. It had this run. It died down, right? With people leaving, consolidated. So meaning there is some support at this level, and then it's starting to climb again, right? So this support level here, in this range here. So this was the breakout unplug, and recently it's coming back to test this support, which was old resistance, new support. Maybe this is your entry, your entry into this stock, right? Entry play for your swing trade, catch to the upside, right? Good risk to reward. You set a stop just below here, right? Or even right here, but looks like it's holding. So you can set it right here or just a little bit under. We'll give it more breathing room, right? So at 32, right now it's sitting at 40. It's at 32, right? So we do 40. That's 32. 8 risk. 8. So that's a 20%. Pretty risky, but very explosive stock too. You see this, how it played out before, right? So we're seeing this pattern emerging again, where it's respecting the 50. It's going back to the 50, bouncing, going back to 50, bouncing, back to 50, bouncing. So if you want to wait, right? If you want to wait for this to confirm itself, then what you're going to have to wait for is it going back up and coming back to the 50. And every time you think it comes back to the 50, you're always going to be asking yourself the same question. Is it going to bounce or is it going to die? Right? Sometimes the best thing you can do is just to calculate how much you are going to lose and get in. That's the best thing you can do. And the best advice anybody can give you, because nobody knows for sure what it's going to happen. So that's plug. So we take a look at plug. There's other one that is also going, charge point. Charge point. This is one that I'm currently in. Plug actually looks better than charge point at the moment, but I think they're relatively similar. They're in the same category of stocks, right? EV chargers also, but I think of the two, I like plug better. The formation of the chart looks better. So here, but I am personally not in plug. I'm personally in charge point. I'm not saying you should jump into charge point. I'm saying you pick the which one better suits you and get in. Right? Or if you want to get in, get into it. If not, you know, just pick something that you want to play. Right. So charge point here. Um, bounce at the bottom. We haven't seen a breakout yet, but this could be a formation, right? Getting some strength here for a test of the highs. Right, so 29. So I think we could maybe test it, and whatever is we time we have left in 2022, maybe we could go test it, or we could approach it, or even at the very least we approach these peaks again right here at 28. I think that's where we're going. Right. So very similar pattern. Um, up the two, I think plug has the better formation, but charge point still looks like it's approaching its breakout. So whichever one fits your risk management, whichever one you like more, that you can't go wrong with. And most of the time, when a sector runs, they all run together. You know, they might not all run at the same time with the same speed, but they will run together. They will go up together. Let's see. We looked at QS before. So let's take a look at QS too. Now, I was hoping that this was the breakout for QS, but unfortunately, it wasn't. It was actually a rejection. But a good thing is it's coming back and it's holding itself at the moment. It's sitting right at the 200, 200 and the 50. So what I'm waiting on to see if it bounces from here. Because if it bounces from here, maybe it has enough strength this time to break this resistance, right? This resistance here, then it keeps going because it's still information with these higher lows here. So it just needs to gather some strength and break up that. Chaos is really explosive too. You could see back in the past, really explosive. We have a year where there is some level of support here. Price didn't just fall back to its IPO. So some level of support there. But like PLTR uh, and uh, and SoFi, these are all brand new stocks. So they're gonna go through this period of testing highs and just range bounding before they really establish themselves in the eyes of investors as something that could be, an idea, a company that could stay. Right. All right. Let's see, Nike. We'll end it with Nike here because I am approaching my hour, but Nike has been doing pretty good. And Nike is one of the stocks that I think it just slowly grinds up every year or so, and it only presents itself as a really good buying opportunity every now and then, right? So I usually play off of the weekly right here. So it's approaching this. We're seeing some resistance here. Maybe it comes back right here to the 150s, which will be a great pickup, right? We see it done here before, where it goes up, can't really break it. It comes back to the 50, keeps gathering strength. This is COVID, so this is different, right? But when it does die, it doesn't completely give up all of its gains. Dies a little bit. This is just golden time for investors. So it's doing that. I think it's a definitely a good stock to have in your portfolio. It's not going to be a crazy gainer, but there's dividends on it. There's premium that you can sell. Premium that you can sell on the contracts, especially if you own multiples of 100. It doesn't move too crazily throughout the year, so you can definitely sell a premium on it for monthly income. So definitely good stock that has three things going for it. It has growth, dividend, and premium on the sell side. And it's seeing some struggles, right? As it approaches all-time highs, seeing some struggles. So I think it could be due for a pullback. Right? You see, especially we see on the monthly too. Right? Nike has had a beautiful chart, right? Every time it goes too high on the monthly, it comes back. So if we're thinking that it's too high right now and it's gonna follow suit as it did in the past, we could see it come back down to 150, 140, even 130. Right? Might just drawn out, right? So it just could be playing in this range, this uh about 180 to 140 for a while, maybe a little lower to the 130, maybe one, if we're lucky, 120 and going. Right? So good pickup. Keep an eye on it. Center alert. So it lets you know Nike's a slow mover, but it's a good, solid company to add to your portfolio. Long term holds. But all right, we'll end it there. I hope that this has been helping you guys, and have a good rest of the week. I'll see you guys Thursday. Stay safe tomorrow. Today was a huge red day for the market, but stay safe tomorrow. Maybe tomorrow might follow suit, and we will see more. We could see more red to the market, or tomorrow could be a flat day where we don't see any movement to the upside, to the downside significantly. So stay safe tomorrow. I hope you guys continue to do good. Enjoy your Black Friday deals because this is definitely a Black Friday deal in the making. Um, and stay safe and hopefully you guys don't spend too much money Christmas shopping. So, all right, have a good night, everybody. Thank you.